Hey everybody, welcome in. This has been popularly requested because the miners have been on fire. So thank you for joining. We're going to talk about what's going on with the miners. Some have exploded, some haven't. So let's dig in. And of course, we look at 8,000 data points, 26 ratios. We get the inside scoop on which miners are best. So let's go. And of course, this is not financial advice. This is just a guy on the internet creating a whole bunch of complex ratios to identify winners. That's it. But I could be completely wrong, so bear that in mind. But I've been pretty good so far. Anyway, let's look at the mining companies analyzed. What's interesting about this is, Sphere Digital, Argo, Bitfarms, Cypher, CleanSpark, Core Scientific, which is bankrupt. Forget about that. They're going to change the whole share structure, etc., which I've warned you about for a long time. DigiHost, DMG, Hive, Hut, Iris, Mara, Molson, Riot, and Wolf. Now, what's interesting is if you look at this little table I have here, I have the gains to the 52-week high. Guess what's interesting? All right, there's one name that's only 19% away from a 52-week high, and that's CleanSpark. And that's stunning, considering some stuff I'll tell you a little bit later. But some people would think, well, shouldn't I invest in Molson? They're nearly 600% away from the 52-week high. Doesn't that sound more attractive than something that's nearly at the 52-week high? And the answer is, we don't know. Sphere Digital, nearly 400%. But what's interesting is sometimes the winners outperform, and you want to be in winners. So that's the key secret here. Let's look at what's going on with miners over the last month since I did this video last. Last month, CleanSpark won the event, and CleanSpark are up the most over the last month too, up nearly 50%. If you look at all these different names here, second place is Marathon, third place Riot, fourth Iris, then DigiHost, BTBT. Bitfarms is fifth spot, and then DMGI, Hive, Hut is down, and Molson is down too. And that typically is reflective of maybe the quality of the name. So you could take this last month's performance and map it to my analysis a month ago. And then you know if my analysis works. Do that exercise. Check my video from a month ago. Anyway, let's look at where we are with Bitcoin, because all of this is a function of about a couple of things like Bitcoin price. This is the Bitcoin top and bottom model, and the Bitcoin bull run is well underway, although we did take a little bit of a dip from the top of the lime green, because the way this model works, it measures 20 different on-chain metrics to determine if we are cold or hot. It is not a price chart, but this will tell us all the signals you need to look at if Bitcoin gets toppy, to tell you when to hedge or when to be careful. So super interesting. In addition, Bitcoin hash rate is up 500% in 800 days. It's ridiculous. So this whole space has gotten very competitive. If you've been around like 2.5, 3 years ago, and you have old rigs from 2.5, 3 years ago, you're not going to make it unless you got abundance of free electricity and free labor to manage your infrastructure. That is insane. In addition, we always watch what the miners are doing around hodling or not. The trend is for more hodling than before. So you'll see here there are periods. This is the miner flows, and when miner flows are negative, it means that the miners are selling more coins than they are mining. And that can be a sign of several things like, well, decline in price of Bitcoin, etc. But sometimes they have to sell coins to cover expenses. But you'll notice over the last month or so, they are not selling as much as they were 2 or 3 months ago. And that's very interesting. So they're trying to hold on to as many Bitcoin as possible because they know the price is going to go up. But they still need to sell some to pay the bills, pay the staff, pay the electricity, buy new rigs, all that type of stuff. So it makes complete sense. Now, we have some new stuff I want to show you, because stuff I've been thinking about. The questions I ask myself. Where could this go during the bull run? Now, there's a lot of people, including 2 people, literally 2 people on the internet over the last couple of weeks said CleanSpark could go to $70. My target, in full disclosure, is 12. But I'm very conservative. If it goes above 12, that's all gravy for me. But a lot of people think it could go to 70. And why do they anchor on 70? Well, I have one theory. Let's have a look at this. This is playing with scenarios. What I've done is taken the actual price today of all the miners. You can see that CleanSpark is somewhere there. Yeah, $6.38. By the way, this is nuts. CleanSpark was less than half that price only a few weeks ago. Absolutely mad. Anyway, if CleanSpark goes to $70, shout out to Seb and Jesse, who believe it can go to $70. That would mean it's a 10.97 multiple from here. And that would also mean the market cap, based on my calculation of my outstanding shares, would go to $8.039 billion. Wow, that sounds nuts. How is that even possible? $8 billion miner, 11x from here? It sounds like crypto. Oh, but it is. Let's break it down, see if it's even feasible. Let's look at, coincidentally, the market cap of Marathon last November 2021 was $8 billion on the nose. So maybe the whole space is bigger. The price of Bitcoin is higher. It is theoretically possible for something like CleanSpark to hit an $8 billion market cap if it can perform better than Marathon. If it can get more hash, mine more Bitcoin, do it more profitably, more effectively, more efficiently, it's completely feasible. So yes, I believe that. Let's play with some more numbers, because that's what we do here. If all the miners do an 11x, these are the market caps of all the miners. And it's quite impressive. The total market cap of the public miners, and this is just the top creme de la creme, would be $83 billion. That's a big chunk of the actual Bitcoin market cap today. That's about a tenth of it. So a tenth of the Bitcoin market cap today would be attributable to the Bitcoin miners if they all go up an 11x, like CleanSpark going to $70. Again, I'm just talking hypothetical numbers. Of course, they're not going to go up at the same way at the same time. As we saw here, they all go up differently. Very, very important to note. Now, let's look at a couple of more things as well. Let's look at stock dilution. So we've created a new model that's really cool. It's called our dilution model. We can check the dilution for any period, like last 30 days, 60 days, 90 days, 1 year, 2 years, 5 years, for any stock. And we ran some numbers. This is fun. So if you look at the stock dilution over the last 1 year for all the miners, and I threw in some other names there as well, like Apple, it's minus 2.14%. What that means is Apple is not diluting. It means they are buying back shares, which is pretty cool. Then you have some things like reverse stock splits happening for some other names too that throw the numbers off. You got reverse 10-for-1 splits and 20-for-1 stock splits, but don't worry about that. I want you to focus on some of the big names. So the worst offender is CleanSpark, 128% dilution, followed by very closely by Wolf with 118%. And remember, they were issuing stock instead of issuing debt, and they are immediately buying rigs to increase their hash to mine more Bitcoin. So when you do things like that, for example, if Michael Saylor issues more stock and uses the cash and the proceeds immediately to buy more Bitcoin at a low price, it makes sense rather than buying or issuing debt and paying very high interest rates. Now let's look at some other names here. We have CleanSpark followed by Wolf, and then Marathon is the third worst on this list. So interesting. Now, what happens if we go back and look at the last 2 years of stock dilution? These are the type of questions I ask myself. Let's see what shakes out here. The last 2 years, number one offender is still CleanSpark. Number two is Sphere Digital. And number three, Riot, 4, Wolf, and 5, Marathon. So just interesting perspective there. And you can see Apple bought 5.12% of their stock back. In fact, Baba in China bought 5.31% of their stock back as well. Interesting. So just some perspective, because dilution does affect your stock price. If a stock triples the amount of shares outstanding, and the price was $10, it goes down to $3. Can you expect it to go back to 10? Yes, if the fundamentals of the business get better as well. So always remember that too. Now, let's look at the new miner model heat map. I'm not going to do a breakdown of all the ratios. It takes too much time. But I just want to share you where we stand today, because people have been pestering me. Please, please, please do an update. So here it is. This is the easy way to understand this. As I always mentioned before, red is bad, green is good, This is a summary of the factors and the weightings, and there's a lot more behind the scenes, but high level, some of my most important ratios like enterprise value over hash, Bitcoin held over market cap over hash, production over hash, EBITDA margin, liability over market cap, production ROI, my special ratio, price to book, and my IA upside, which comes from many analysts and my discounted cash flow calculations, which are also part and parcel of this model. So green is good, red is bad, what has the most? And remember, as the stock price changes of an asset, imagine CleanSpark goes from $3 to $10, or Marathon goes from whatever to whatever, it will change all the ratios, and therefore it'll change all the colors and all the weightings that I give. So it automatically does it for me, so I don't need to measure everything individually. It's a cool model and it's working really well so far. Now, this is the new IA Composite Score with equal weightings of all ratios. So what I do, because I'm very risk averse, I penalize people that are not efficient. I penalize companies that have a lot of debt. I penalize companies that aren't effective, that aren't efficient, that have older rigs, all that type of stuff. And this is the equal weighting score. Number 1 is still CleanSpark. Number 2, popping into second place, is Bitfarms. And number 3 is Cypher, and then 4 Hive, then DMGI and BTBT, Migi, etc. It's interesting because if you look at the equal weightings, Marathon gets hammered and Iris is even worse. In fact, Core Scientific, which is bankrupt, does better than Marathon and Iris Energy. That's just the way I measure things as a finance guy. And these, as I mentioned before many times, mining companies are the hardest things to analyze ever. Tesla is easier to analyze than these guys because there's so many multiple dimensions you have to measure and to weight accordingly. Now, what I also do is with this is equal weightings, so everything, all the ratios, 20 ratios get an equal weighting. This is with my weighted weightings. Let's check out the scores here. Number 1, still CleanSpark. Number 2 is Cypher, not Bitfarms. Under equal weightings, it's Bitfarms. Under weighted weightings, Cypher beats Bitfarms. And number 3 is Bitfarms, and then BTBT, etc. So it's more or less not too different from my weightings, although my weightings are pretty radical in some weightings as well across the board. So quick summary, everybody. You've been asking for it. Here it is. The winner is still CleanSpark, despite the big rally in stock price, despite the fact it's only 19% from a 52-week high. It still wins because it has the most green. Really simple, very crude. We don't like red. Also, Cypher Mining, number 2. And third place is Bitfarms, number 3. And in full disclosure, I own 2 miners only. Number 1 is CleanSpark, and number 2 is Bitfarms. So that's it, everybody. I hope you enjoy the show. Subscribe to the channel. If you like deep analysis, that's what we do here. Thank you all for coming, and I'll see you all tomorrow. Bye-bye.